Journals: sales, purchases, returns inwards, returns outwards, cash book, general. Goods for resale on credit are recorded in the sales, purchases, returns inwards, and returns outwards journals. All cash transactions are recorded in the cash book. Non-cash and non-goods for resale transactions are recorded in the general journal. We sold goods to A Limited on credit. Sales journal: date, customer, invoice, folio, amount due, A Limited. We bought goods from B Limited on credit. Purchases journal: date, supplier, invoice, folio, amount due, B Limited. A Limited brought back some goods to us that were bought on credit. Returns inwards journal: date, customer, credit note, folio, amount due, A Limited. We sent back some goods to B Limited that were bought on credit. Returns outwards journal: date, supplier, credit note, folio, amount due, B Limited. We received cash from A Limited for goods owed. Cash book has a debit side and a credit side. Debit, credit, left side, right side, in, out, have, don't have, receive, give. Cash book. Debit side: date, details, folio, discount allowed, cash, bank. Credit side: date, details, folio, discount received, cash, bank. Debit: A Limited, cash. We paid B Limited with a check for goods owed. Credit: B Limited, bank. We borrowed cash from the bank. Debit: bank loan, cash. We bought equipment with cash. Credit: equipment, cash. We sold goods to C Limited for cash. Debit: sales, cash. We sold goods to D Limited and received a check. Debit: sales, bank. We invested cash into the business. Debit: capital, cash. We deposited cash into the bank. Credit: bank, cash. Debit: cash, bank. We opened a new set of books with building, equipment, motor vehicle, prepaid expense, debtors, bank, cash, bank loan, and creditors. General journal: date, details, folio, invoice, debit, credit, building, equipment, motor vehicle, prepaid expense, debtors, bank, cash, bank loan, creditors. Assets minus liabilities equal capital. Capital: debit, credit, balance. We bought furniture on credit from F Limited. General journal: Debit furniture, credit, accounts payable, F Limited. Bad debts have been written off. Debit income statement, credit provision for doubtful debts. Depreciation was charged on fixed assets. Debit income statement, credit provision for depreciation. Now test yourself. 5 seconds. Owner starts a business with cash from his savings. Cash book. The business buys goods for resale on credit from X Limited. Purchases journal. The business borrows cash from the bank. Cash book. The business sells goods to T-Mart Limited on credit. Sales journal. The business sells goods and receives a check. Cash book. The business buys equipment on credit. General journal. The business sends back goods bought on credit to creditor. Returns outwards journal. The business pays cash for transport of goods for resale. Cash book. Customer brings back goods bought on credit to the business. Returns inwards journal. Bought van on credit from Best Motors Limited. General journal. Paid cash in full to a supplier for goods bought on credit last week. Cash book. OG Limited for light bill. General journal. Paid cash in advance for next month's rent. Cash book. Bought goods for resale and OH Limited. Purchases journal. Sent back goods for resale to supplier for cash refund. Cash book. Charge of 10% depreciation was charged on fixed assets. General journal. Customer pays cash in advance for goods not yet in stock. Cash book.